Well, holy smokers, folks, this ain't no dang joke. Is this market? Wow. Everybody's looking at this and like, what is going on? We're going to talk about that. What's going on in this market? First off, what's going on? Who's this guy? Hey, he's got a backwards head. He got shaved. Oh my gosh, what happened to this guy? Okay. It's Rally Jeremy in full effect. Dow having a huge day up today, about 655 points as of right now. Nasdaq's having a great day. S&P 500's having a great day. You know what's having a better day than everything? The Russell here today, 2.7% upward move for the Russell. That's just a great day there. So great day for the indexes. Everybody's wondering what the heck's happening in this market. Why all of a sudden is the market going risk on? We're going to talk about that. There's some very specific reasons why this is going on, essentially. If I pull up my watch list here on Hungry Bull, yeah, there's a lot of green. Some massive moves. Nordstrom, 38%. My gosh. Purple, 14%. It's interesting. I was just talking with B-Man last night, and I was telling him how attractive the risk-reward is in purple right now. And it's just like ridiculous. I mean, the risk-reward in purple is crazy right now. So that one's having a great day, 14%. Winning resorts, if that one, you see that one up nearly 10%, you know it's a risk-on day in the market, because that's generally, if Win ever makes a move like that, people want to take a little more risk out there. And just like they might take some risk at the Win properties, they like to take some risk in the Win stock. I love Win, great company. It goes through some hot cycles for, a year or two, and then it just goes through some down cycles. It's consistently in a stock. It's a little more of a swinging stock, let's call it that, than a long-term play. Although the company's a great long-term company, because they're so negatively affected by anything that can happen macroeconomically. Look at once in a 100-year pandemic comes out, shuts them down in basically several different markets. And obviously, because they have big business in Macau, can be very dependent upon what the Chinese government does at particular times with crackdowns and things like that. Foot Locker, man, is this one volatile right now? Almost a 6% upward move here today. This one's like, it's insane. Maxar Technologies remains the hottest stock pretty much in the market. And as long as this Russia situation continues to be crazy, Maxar should be continue to be just kind of a hot short-term stock. Whenever that fades off, I think Maxar's stock will have a little bit of troubles. The company's a great company. It's just right now they're getting mass publicity all over the world, literally, because there's satellite imaging technology and is taking pictures, and those pictures are going on every big news publication out there right now. So everybody just wants to play the stock right now, as it's like the hot play in this sort of market. And when it comes to something like Maxar, whenever this dies down, I think the stock price in the short term will have trouble, although I actually do like the company in the long term. Funko, 4% upward move there. Pfizer, 4% move upward there. SoFi, about 3.7% move there after their earnings. Some were hoping for a better day than that, but it is what it is. You got to take what you can get. And some of the beaten down dogs. Sam up 3% here today. Skyworks Solutions, 3%. If we pull up next one up, Avant Brands, 3%. Walgreens having a good day, 2% there. Stitch Fix, 2%. Corsair, 2%. The Chef continues upward and about 2% move there. Tesla, surprisingly underperforming today. Only a 0.5% move, so that was a little surprising to see Tesla underperforming. Now, the interesting thing is, I was looking at this and I was like, a lot of green, but I looked at my watch list and I was like, there's actually a lot of red. And I'm talking viciously red. And if I just started with this red, I would think today was a horrible day in the market. Look at this. Okay, Lemonade stock, that stock doesn't get hit enough, a 7.4% downward today. Look at GoodRx. Man, is that one getting hammered. I got to see what's going on with GoodRx, because that one just got hammered yesterday and hammered again today. About a 7% downward move there. Voyager Digital down 5% here today. Beyond Meat, 4.5% downward move. Robinhood, the Hood's down 3.5% here today. The Planet down 3%. Smile Direct Club down about 3% there. Teladoc down 2.5%. Square down 2.5%. And Palantir down about 2.5%. So, on this great of a day in the market, I'm actually surprised to see. Remember, a lot of these are popular retail stocks. I'm actually surprised to see those stocks down that much on this huge of a day for the market. Because let's not mistake it, okay? That's a huge day for the market. So to see those stocks down like that is actually a little surprising, all right? Now, what's going on here? There's several different reasons on why you're getting such a massive risk-on day in the market. The first reason up here is Federal Reserve Chairman Jerome Powell came out and spoke today. Jay Powell said he sees interest rates hikes coming. Okay, we all knew that, okay? But noted Wednesday that the Russia-Ukraine situation has injected uncertainty into this outlook. Okay, so that gives the Fed a little let's call it like a scapegoat out of this situation with, raising rates, that if they want to raise a little less aggressively, and I've been talking about this on the channel for like the past week, they want to raise less aggressively now. They have the perfect scapegoat here. Oh, there's this Russia situation going on. We don't maybe want to raise as quickly, right? Now, this is the most important thing with what he said, very specifically. Powell said he sees a series of 0.25% point increases coming, though he left open the possibility of moving more aggressively should inflation persist. Now, that is so darn key. And the reason that is so darn key is the market was expecting at least a 0.5 point raise. And including myself, I was even expecting at least a 0.5 point raise in March. Like, right off the bat, do a half point raise. And so the fact that we're talking only a series of quarter points means the Fed is not going to be very aggressive at all when it comes to raising rates. And so any fear that was really out there as far as the Fed's going to go crazy, 0.5 point for the whole year. Next thing you know, soon we're at 3-4% by the end of this year. And what that would mean for the stock market is not good, right? Because then savings accounts would likely all go up massively. Obviously, housing could potentially drop if they raise that quickly. Loans could be affected very negatively as far as taking out loans because you're going to pay a much bigger interest rate. When you thought about all that baked in, horrible, like scary stuff, all of a sudden now that's basically being taken out. Because now we're just talking about a series of quarter points. That's a very, very small amount into the market. And so now all those folks that were very, very scared, you don't have to be very, very scared about the Fed's going to be a beast and like they're really going to go after this. And I had a lot of friends that were, saying, hey, oh man, wait to see how fast the Fed's going to raise here. They're serious about taking down inflation. And that's just not the situation. That's just clearly not the situation at all. And so, inflation is going to continue to be a situation, regardless if the Fed raises or not. That's the thing. Like, I think people assume like that if the Fed raises a little faster, like it's going to kill inflation. It's not the way it works. Inflation is going to remain high throughout the year. What I expect, and I've said this a million times recently, and I'm going to continue to say it, is starting in 2 months from now, I think the rate of increase in inflation is going to slow dramatically. And as we go throughout the year, the rate of increase of inflation is going to continue to slow and slow and slow. There's still going to be inflation. Don't think anything other than that. But the rate of increase of inflation, which is extremely important, that is likely going to start to drop as starting 2 months from now. The implications for the U.S. economy are highly uncertain, and we will be monitoring the situation closely, said Powell. The near-term effects on the U.S. economy of the invasion of Ukraine, the ongoing situation, the sanctions, and the events to come remain highly uncertain, he added. Making appropriate monetary policy in this environment requires a recognition that the economy evolves in unexpected ways. We will need to be nimble in responding to incoming data and evolving the outlook. So basically, he's just leaving the door open there. So if they have to raise more aggressively, they can raise more aggressively. If they aren't going to raise as aggressively, and let's say they go one period without even raising rates because they got some data that was troubling or something like that, they're leaving the door open that nothing's certain here. They could raise maybe a little more aggressively. They could raise less aggressively. So I think that's kind of a smart decision on his part because things change really rapidly in a 6-month span, 9-month span, 12-month span. A lot could change in the underlying economy. A lot can change, obviously, in the global economy and with situations like this, right? And so you kind of want to leave yourself a little wiggle room there. Let's just call it that, a little wiggle room so you're not like, oh, I have to do this certain thing because that's just not the best decision, right? Later, he said the Fed wants to get inflation under control. But, quote, the bottom line is that we will proceed, but we will proceed carefully as we learn more about the implications of the Ukraine situation on the economy. The observations come amid a 40-year high for inflation as the U.S. Basically complicated with the Ukraine situation has driven oil prices insane, which if you're thinking about inflation, right? Well, one of the bad things for inflation is oil going so insane, it's going to hurt gas prices, it's going to hurt CPI. Consumer price increased 7.5% from a year ago in January, and the Fed's preferred inflation gauge showed its strongest 12-month gain since 1983. Inflation's been going beast mode. We know that, and it's likely going to continue to go to beast mode, at least here in the short term. That is something we do know, okay? So, nonetheless, Powell coming out and basically being a little, less aggressive, the market takes that as a win. The market takes that as a risk on, right? Next thing up here, so last night, if you didn't know, there was the State of the Union address, which President does pretty much every year. And it was interesting because I was looking at some data based upon how the stock market does the day after the State of the Union, which I thought was interesting. And, this was basically 2002 through 2019, because that's what the data Market Watch had here. 11 days are green, 7 days are red after the State of the Union. So most of the time, the market is green after the State of the Union. And if you think about the State of the Union, usually it's supposed to be an exciting speech, and it's supposed to get everybody jacked up. And so I guess it's a little more natural that many times you're going to have a more green market, given, there's usually an optimistic tone, and we're going to stop this, and we're going to go after this, and those sorts of things. So that's interesting. You should usually expect a green day after the State of the Union most of the time. Next thing up here that I think is turning this market to a little more risk on is this. Google tells employees in Bay Area and other U.S. locations to return to office by April. Now, what's interesting about this is how fast things are really flipping here, right? Where, going from mask off to now employees returning to locations and things like that. And, obviously there's no other way of putting it other than this is a great thing for the overall economy. And I was talking with somebody one day about, them going back to the office and how much more money they're going to spend by going back to the office versus when they're at home at work, right? And they're going to eat, obviously they're going to eat lunch out instead of eating lunch at home usually. They work for a big, tech company out there. They're going to have to fly a lot of times from one location to another location. Travel is going to open back up for them, hotel stays. And I was just thinking about, Uber rides and all the stuff that is good for the overall economy that just doesn't get seen when somebody's just sitting at home, for instance, and working from home. So ultimately, it's a good thing. Now, some people want to get political about this, and I know some people that say, it's the Dems, with midterms coming up, the Dems want to essentially, get the economy back opened up as much as possible. And so I'm not going to get into that whole game, but that's a thought process out there. But yeah, I mean, when you see stuff like this, it's obviously, there's no other way of putting it other than it's bullish for the overall global economy. Okay. I think Nordstrom, okay. So Nordstrom having a huge upward move today, 30+%, right? When they came out with their earnings last night, there's no other way of putting it, but that was, I think, a big moment for the market. And the reason being is Nordstrom reported essentially numbers that were massively better than the market was expecting. I actually think they might have lowballed numbers a little bit. And so when you're talking about Nordstrom, their department stores cater to the upper middle class and to even the wealthy, right? Their Nordstrom Rack stores really compete in the middle class. And so when you think about Nordstrom, you think about an ultimate consumer play. And if there was any worry about the underlying economy and no one's going out and spending money, which I can tell you is completely false. You go out there in the real world, people are spending money left and right. This is getting killed day after day. You look at the Target numbers, right? Target's you want to pay attention to the middle class, pay attention to Target numbers. Literally, watch Target numbers. That's going to show you how the middle class is doing. Because guess what? The middle class, that's who shops at Target. I mean, even more than the middle class, but that's who ultimately shops. Target's putting up their numbers because the middle class shopping at Target, right? So Target numbers, extremely encouraging. Nordstrom numbers, amazing. And what we're seeing is a market right now, at least in the short term, of the haves and have-nots, right? And this is what's confusing a lot of people. So as the economy is opening back up more and more, as the world's getting quote-unquote back to normal, right? You have certain companies like Netflix, like Facebook, other Shopify, other services that benefited massively from a 2-year span where everybody was kind of forced to be home, to now that's going away. And other businesses are prospering because of this, while other businesses are being hurt, right? Because they're having to go against insane comps year over year, and so it's making them look like they're not even that strong, right? Facebook is still an incredibly strong company, right? Amazon's still an incredibly strong company. All these companies that are reporting numbers, but they're troubling guidance, they're being hurt because they're having to comp these insane numbers year over year, and it's hard to comp when the world's open back up. And so you're having a divergence in the market where there was a misunderstanding about, oh, the economy must be bad because Netflix is reporting bad numbers. And it's like you just start thinking about things logically, and it's like, dude, a year ago, everybody was forced to be home. So Netflix pulled so much demand forward. Like, what do they have to pull forward now? And as the world economy opens back up, there's not as much of demand like I have to sign up for Netflix now, right? Facebook, just social media in general. If people aren't just sitting at home all day, imagine all the kids that were out of school and whatnot, right? You're just sitting home playing video games or on their phones or on social media and whatnot. All those things benefited massively if you're going to force everybody to be at home. But as the world opens up more and more, the numbers are going to be tough comps for all those type of businesses. And meanwhile, other certain businesses are just, continue to thrive in this sort of market. Think about companies like Live Nation and what they're going to be able to do. Think about a lot of the hotel chains and how the numbers they're going to put up over the next year or two. Think about the airlines and numbers they're going to put up over the next year or two as the world economy opens back up, right? So there's going to be a divergence here between the companies that have these incredibly tough numbers to try to comp against, right? Which is more the at-home plays, and then we're opening back up the world economy plays that are just in a really, really strong position right now. And it's causing a lot of confusion out there in the market. By the way, I hope you guys are enjoying this video. As always, I appreciate you guys joining me. Make sure you subscribe to the channel if you're not already subscribed, okay? Now, VIX is still running red hot. It came down massively today, but we're still at a 30 on VIX. And I think it's important to remember that when the VIX is this high, it doesn't happen very often. Most of the time, the VIX is in a 10 to 20 range. So when you start talking about a 30 or a 30 plus VIX in this sort of market, remember, you're still running hot when it comes to volatility. And so I want to just leave off here with a few words to everybody watching this, right? In this sort of market, right, that VIX is still crazy, a lot of volatility in the market. You can't get too down in this market. You can't get too hyped in this market because the headlines are going to be different by the day. In 1 minute, it's going to seem like great news, and next minute, it's going to seem like bad news. And so it's entertaining to watch all this play out and kind of pay attention to it. But at the end of the day, don't make your investment decisions based upon any of these headlines. Powell is going to do this or that. Make your investment decisions based upon if you see great deals in certain stocks over the next, 3 years, 5 years, 7 years, and you think this is a great stock to be in over the next, several years. Make your decisions based upon that, because if you're making your decisions based upon the headlines, I'm telling you, in this sort of market, it's just not the right way to do it, because the next day, all of a sudden, you can get bad headlines, and the next thing you know, you're selling out of stocks because you got some bad headlines out there, and you just don't want to do that in this sort of market. You just kind of got to keep your head down. You can see what's going on out there, but ultimately, just focus on buying companies that you love for the next 5 years. If you do that, and you're right about those companies, you're going to make a ton of money in this game. And trying to time out the bottom and maybe we'll drop back down tomorrow, so maybe I'll wait till tomorrow. Don't play that game, because you're just going to start playing the short-term trading game, and that's not a game to play, guys. That's not a game to play at all. So, keep focused, keep your head down. Don't get too hyped on this market. Don't get too down on this market. Make the buys you got to make. Throw those babies in the filing cabinet. If they go down, buy some dang more. Throw those babies in the filing cabinet and be a happy owner of those companies over the next, 5 years or whatever. So yeah, hope you guys enjoyed this video. As always, I appreciate you guys joining me. Much love. Also, we have if you've been in the market for less than 2 years, this is massive. I basically made this course free. My stock market investing mastery. It's a little 11-part course. If you've been in the market for a year, 2 years, or less than that, that's a phenomenal course. I will teach you a lot. It's absolutely free right now. And make sure to subscribe to the channel if you're not already subscribed. Thanks for watching. Have a great day.